Hey, welcome back to the Mining Pod. We are doing our news roundup. We're joined by Matt Kimmel of CoinShares and Colin Harper of Blockspace to go through this week's Bitcoin and Bitcoin mining news. We'll be right back after a word from our sponsors.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Okay, boys, we got a lot of Bitcoin mining updates this week, more so on the expansion side, which we'll get into. And then we have a little cry corner at the end about this Economist article, which I find hysterical. But first, we're going to go to our difficulty update, as always, by our friend, Matt Kimmel. Matt, what are we looking for in the mempool this week?
Yeah, so last week, we talked about how we were about halfway through the difficulty adjustment period, and hash price got a little relief from Babylon, basically a kind of meta protocol in the second layer that I know you guys have been writing about at Blockspace. Basically, launching that caught some demand and caused a lot of fee activity, which helped out the miners. That's basically retraced the fee environment, and we had made our way through the difficulty adjustment period. So now we went up 3%. And so hash price right back down, not quite at difficulty all-time high that we hit a couple weeks ago, but we are sitting pretty close. And it's kind of the same story. Unfortunately, we're at about between 40 and 45 dollars per petahash on the hash price. And I guess we'll kind of see where we take it from here. I think everyone, again, is just kind of wanting the price relief. We basically retraced back from what seemed like was spurred from Mr. Powell's comments on rate cuts, last week as well. So there's a little price relief, and now we're sitting back at about 60K. I don't know, what do you guys think? 58?
58, gang. That's like the meme, right? Where it's like the price keeps going back to 58 no matter
what.
It's
going to be $58,000.
Yeah.
We're never going any higher, guys.
Kind of sad. For Bitcoin miners, it's definitely tough. And that's why we're seeing a lot of expansion stuff right now. We'll get into that in the next segment, where a lot of miners who had cash on the balance sheet are able to scoop up other operators who are just in a bad debt to equity position or just private and can't bail themselves out. So that's pretty tough. But part of like the Bitcoin mining game, if you're just going to be part of it. So let's go to the story with Rhodium though first, and I'll pull this one up. Speaking of tough,
some news that Blockspace broke last weekend. Bitcoin miner Rhodium, private Bitcoin miner, files for Chapter 11 bankruptcy. This has been something of, I wouldn't call it a long time coming, but there has been scuttlebutt surfacing in the Bitcoin mining world that Rhodium was having some financial troubles. And we saw that the chickens come home to roost, so to speak, last week. If you're going to file for bankruptcy, filing on a weekend is always great because then you won't get as much news coverage. But not if you're Blockspace. We're going to pick it up. But yeah,
we're lurking.
We're lurking. We don't know how many exahashes Rhodium has online. According to the Miner Mag, when Rhodium was trying to go for an IPO, they filed as having 2.7 exahashes as of December 2022. And some of this hash rate is at Riot's Whinstone facility, which is partly wrapped up in this bankruptcy, or at least part of the story, because Rhodium, as you can see in our article on Blockspace, is currently seeking $67 million in damages related to its hosting agreement with Riot. So there's probably a lot of inside baseball that we could say here, but I don't think that Riot or Rhodium would necessarily appreciate some of those things. And we might be speculating on stuff that we don't know very well. But that being said, this Whinstone debacle between Riot and Rhodium has been going on for some time. And it seems as though it's kind of contributed here to the fact that the miner is now insolvent. So something to keep an eye on. We're going to have some follow-up reporting as we have bankruptcy documents come in. Rhodium has assured its investors that it is seeking debtor in possession financing, which it will use to operate throughout the bankruptcy and hopefully emerge from it. So for those who don't know, Chapter 11 is a restructuring bankruptcy. When you file for Chapter 11, it is with the idea that you will be able to restructure your debt and emerge on the other side more or less solvent. We saw this most recently with Core Scientific. They did a Chapter 11 throughout 2023 and came out on the other side. But we also saw it with Compute North, where their entire business basically got segmented and sold off piecemeal. And Compute North, as it existed going into Chapter 11, no longer exists. So, it's not a guarantee that they will come out with this with everything intact, but they are going to try their best to do so. And they've assured investors that their operations, both hosting and self-mining, will not be affected by this process. So,
yeah, I'll pick it up from there. Great summary. So there's 4 entities that filed for bankruptcy last Saturday. There's like a JV, I think that was the one at the Windstone, and then a few other like sites that had various megawatt capacities that were under separate entities. An email that was leaked to us at Blockspace talked about this, and they said to investors that they're going to try to restructure to build the company back up. This has happened with mining quite a bit. The biggest one, of course, being Core Scientific, but tons of others as well. And some of those have ended up being better for shareholders. Some of them have been just disastrous. One thing I want to bring up is some points from the Miner Mag talking about the debt to equity ratio, which sort of is a very good predictor of what's going to happen with a Bitcoin mining company. If you become too deep in the debt, there's a good chance they're going to wipe out. The Miner Mag, we're looking at this chart from them, has some great information about like debt to equity ratio for some of these pubcos. The one that stands out to me is Argo blockchain, which if you go back to the Q1 numbers and the different numbers, you see it's like pretty bad, but it's been getting better steadily as they've been paying off some debt. And then the Core Scientific one, where they've had like these different tranches of warrants be repriced and then open up to sell debt. So they're moving back into the correct way and they're looking really strong. So some miners have been able to use like the AI HPC play to get back into the game. And then some miners who are really just banking on Bitcoin mining have not really had the opportunity to do that. Their strategy has been compressed with hash price, and they're often looking to be sold or divvied up piecemeal, which definitely goes into our next story. I don't have much more on Rhodium, but do you guys have any other thoughts before we exit that one?
No, not really. Other than if you are a bankruptcy lawyer who is also a Bitcoin mining person or just as interested in Bitcoin, please hit me up at Colin, L at blockspace.media. Love to talk with you about this story so I can make sense of this extremely complicated process.
Good ad placement. Okay, we will move over to talk about expansion and whatnot within the Bitcoin mining landscape. So let me pull up this on screen, but there was a few announcements this week for major Bitcoin miners expanding their fleet operations. The first one was Bitfarms and Stronghold. I actually believe this happened last week, but they entered an agreement to purchase Stronghold. And then they're also taking over the Mawson site, which is in Western Pennsylvania. This brings Bitfarms total up to 950 megawatts of potential deployments and capacity. And I believe they have a pathway up to like 1 point something gigawatts as well. So they're going to be in the 1 gigawatt club here shortly if they continue to execute. And then GDA, which announced a 40 megawatt expansion in a Texas site and a pathway up to 400 megawatts. So this is from Bitcoin Magazine. Bitcoin miner GDA, which is private, plans to expand its recently launched 60 megawatt Texas data site to 400 megawatts. So there's also rumblings of them possibly going to IPO. And then the last one I wanted to talk about was Cipher Mining. You can see here again from our friends at the Miner Mag. Bitcoin miner Cipher to acquire new 300 megawatt site in Texas. And this is, I believe, right after their Black Pearl site was purchased, which was another 300 megawatts. So what does this all mean? I think it's pretty simple. There's a lot of cash for some of these Bitcoin miners who have done a good job with their hodl positions at the end of the last bear cycle, going to the bull cycle. and have been able to use that price appreciation, or they've used ATMs really well, or they've just had like cash on the balance sheet from other things. And now they're going and picking up Bitcoin miners at record low prices because hash price is really low. So a lot of these sites are a little cheaper. The one thing I just have questions about, and I don't know if it's something that we can like really get to on this show, is like, just because hash price is low doesn't mean sites are going to be cheap. Sites are still expensive. There's still a lot of demand for energy and a lot of demand for built out sites. So I'm wondering if Colin or Matt, you guys have any thoughts on that last point, or just general thoughts on the 3 companies we discussed there.
I'm just reminded of how ruthlessly competitive the space is, right? And how apparent it is that when different strategies play out. Because we have certain miners right now that are ruthlessly expanding. And then we have miners that are also going through acquisitions and tapping into financing and really feeling the depth of hash price that has persisted for a while now. I mean, months on months. And like, to put it into context, right, where hash price is now, it was double back in March 2020 when the Bitcoin price sank to, 5K. And so that's how much hash rate has ripped, how much difficulty has risen, and how much competition there is in the mining space. And so I think we're just seeing kind of symptoms of that all over the place. If you're not cash flow positive, right, then you are basically tapping into your balance sheet or financing in whichever way, equity or debt, right? Or your other option is to basically wind up and exit and try to go through a Chapter 11 or acquisition deal. And I think we're just seeing like a diverse range of things happening across a bunch of different participants. But like the story arc, you're just kind of seeing it play out over time. And we're looking at this kind of like week to week basis, particularly on this show. But it's very fascinating. It's like I can't stop looking and paying attention to it and studying it. But at the same time, I'm like just kind of hoping, praying for this price rip to where everyone just gets like this really comforting.
We want all our friends to win.
But yeah, Colin, I'll throw it over to you. I mean, I feel like you'll understand this as well as anybody. What do you think?
Not too much to add, but just to maybe piggyback on something that Will said. The sites are not necessarily cheap, but it's obviously miner dependent. Depending on how underwater you are or what your PPA is or any number of factors, you're going to be selling for a fairer price to you or your buyer, right? So if a miner is really distressed and they really have no other options, then they're going to sell their site for a discount compared to what they put into it. So I think that a miner that has been exemplary here in finding those opportunities is CleanSpark, right? I mean, they kind of came out of nowhere, acquiring site after site in Georgia, later in Mississippi, and they've really expanded their hash rate rapidly through this strategy. So looking for distressed assets and looking to acquire hash rate and megawatts on the cheap right now is obviously extremely advantageous for some of these miners. And I think that we're going to see more distressed asset sales, especially if Bitcoin doesn't rip, per what Matt just said. So it's going to be a story that I think we keep tabs on for the rest of 2023 or 2024. Excuse me.
Grid, CleanSpark, Marathon had some reshuffling with HUD 8, which HUD 8 was a reshuffling of US Bitcoin Corp and Copy North.
USBTC, yeah.
I mean, if you haven't been paying attention to this for the last 2 years, like if you like got hit in the head with a rock and you woke up 2 years ago and you're still interested in Bitcoin mining for whatever reason, maybe you just like kind of hate your life and you're still a part of this, then you'd be like, oh, all the names are changed. Like everyone's all over the place. So yeah, it's a different market, different cycle, but the rules remain somewhat the same. Bitcoin price goes down, people lose their shirts. Some people are able to pick up more shirts and get a nicer wardrobe. Okay, let us go to the last segment for HPC. And then we have our Cry Corner, which I'm actually very excited about. I'm kind of hoping that Alex Jones makes another appearance. But Colin, to you.
You don't want to bring out Alex Jones. Yeah, so we did an AI HPC update for the Mining Pod newsletter this week. Hit that subscribe button if you have not subscribed already. But basically, we just wanted to contextualize where some of the AI and HPC strategies are sitting currently with the miners who have been beating their chest about them the most. So if you could scroll down just a little bit here, Will, so that we can see. I want to get to the revenue chart. Or this is actually first, maybe the stock price change chart, just to contextualize this. So we've had a handful of public Bitcoin miners come out with AI and HPC strategies. And when I say strategies, I say that to kind of lump them in a broader bucket because their execution at this point and how much time and money they put into this, it varies widely from miner to miner. So you have everything from miners like TeraWolf, who has said we're looking into this and trying to do a pilot, to miners like Core Scientific, who are inking deals with these AI companies to provide megawatts and compute load. And the main miners that we cover in our update are Core Scientific, Hut 8, Hive, Iris Energy, now Iron, Bit Digital, and we briefly touch on TeraWolf and BitDeer. So as you can see from this year-to-date average stock price change, the reason these miners have been at least announcing or looking into AI and HPC heavily is because the market is rewarding them for it. NVIDIA is at a $3 trillion market cap. Whether or not that's justified is for some other analysts in some other universe to break down. But at the end of the day, investors are hungry for anything that is going to bring them returns. And the AI HPC narrative is super strong right now. And as you can see from this, year to date, as of, I think, August 27th, AI and HPC miners were returning 39% on their stock prices year to date, whereas traditional miners had lost 19% on average. And this is taking the top miners by market cap. You can see down at the bottom of the chart which ones I include. But how much of this is hype and how much of this is reality? This has been a huge kind of trend or thread for us to pull on. And if you'll scroll down to the revenue section here, Will, you can see that currently these business lines are very much in their infancy and they're really not generating that much in terms of gross profit. As you can see right here, Bit Digital had the largest gross profit out of all of them. I want to caveat that I am not sure based on their filings because it's not totally clear how much of that is from providing actual cloud computing services and how much of that is from equipment sales. If equipment sales are included in this, which they seem to be, that would indicate why their profit margins are so much fatter than the rest of the competition. Because right now, the two models of AI and HPC compute that these miners are chasing are really leasing a tier 3 data center, which is what Core Scientific is currently doing, or outfitting their current data centers with AI and HPC computers, which is what some of these other miners are pursuing. And in fact, Core is going to try to retrofit their data centers to provide HPC load as well. But the reason I bring up that leasing component is because if you're leasing one of these data centers, your margins are going to be very thin. And that's why really for a long-term strategy to pay off for these guys, they're going to need to either retrofit their existing mining facilities or build one from scratch. Or as Hut 8 has done, buy one outright. They bought TerraGo in 2022. But as we can see, even with that, their margins are still very slim. And so the question will be over the next year or two, really 3, because these data centers take a long time to build. Is this pivot going to pull off for a lot of miners? It's one of the biggest question marks currently that's hanging over the space. There's a lot of skepticism. There's also a lot of hype that has been generated and a lot of excitement for these miners who are announcing these business lines. So I won't break down miner by miner where they're at in terms of their strategies and in terms of their updates for Q2, but go check out that article. I kind of break down on an individual miner basis which miners are doing what and what strategies they're pursuing, because it's kind of like mining in general. You know, we often talk about the industry kind of holistically and lump every miner into one bucket. But just like there are 1,000 ways to skin the Bitcoin mining cat, there are 1,000 ways to skin the AI and HPC cat. And all of these miners are going to approach it from different angles in terms of what they think is most optimal for their businesses. So that's going to be a great story to track over the next few years to see which one of these strategies actually pays off more than the others.
No, great article. And also did really well. So people enjoyed it. A lot of people spent some time reading that one.
Thanks for reading, guys.
I definitely enjoyed the read. I think the one I'm looking for is BitDeer. We had a nice op-ed from BZ, Brandon Bailey, or a Second Gate about that the other week. So you can also go find that on Blockspace. And there will be a nice podcast about that next week on Tuesday. So if you are more of a podcaster as opposed to a reader, you can check that out. Colin will be talking with BZ about BitDeer and their different plays, because they got the ASIC game, they got the HPC, they have hosting, and they have Bitcoin mining and the energy play. So quite the diversified. Wow. Quite the wow. One more time, guys. Quite the diversified play there. Matt, we've been podcasting together for 2 years. You can't laugh.
I was about to put on my Adam Sandler hat.
Okay, last segment, our Cry Corner, which we sometimes call Shitcoin Cry Corner, but
I like Cry Corner. I think this should be definitely a mainstay.
It's a thing. I forget about it sometimes, but if there's not a token involved, we can't call it the Shitcoin Cry Corner. We're also a family-friendly publication here. But we have this from The Economist: why Texas Republicans are souring on crypto, playing the state's energy market has become more profitable than mining Bitcoin. So this article goes through a long soliloquy of why Trump and Bitcoin miners are best friends and what that means for Texas. And one of the cornerstones for this argument is that the free grid of Texas, the ERCOT grid, where you can buy and sell and generate electricity however you want without government interference, according to them, is really good for Bitcoin miners who are trying to hurt the environment. Few quips or problems with this article, which we can get into in a second. I want to get a general take, though, from Colin or Matt before we go into it. Colin?
No, you got to let Matt take the lead with this one. I'll ramble too long. So, Matt, you should take first stab.
So I guess where I just typically stand on the energy or the environment argument, which they make here, and I think the author, or at least kind of the Twitter thread that kind of flagged this, was they said that Bitcoin was basically has little value outside of financial speculation, right? And I think that when people have that general take that Bitcoin is useless, then in their mind, any amount of energy, of which is very productive, right, and can be used for so many different things, any amount is too much in their mind, right? And so I think, like, from a starting standpoint, it's already kind of a losing discussion to have.
Mm-hmm.
And that really, there needs to be kind of a realization or an awareness that's made that Bitcoin is useful for much more than just financial speculation, right, which in and of itself is not necessarily a useless thing, by the way. But that's a whole side discussion about economics and so on and so forth. The other point that's in this article that's really harped on is about curtailment and demand response, right? And how Bitcoin miners are basically using up all the demand response programs. The problem I have with this is that when there's peak load, right, and you need kind of these suppliers to come in and assist on the grid, having more supply, right, only helps the consumer. Right? If there's demand that needs to be met, and there's only a little bit of power that can come from suppliers to meet that, then the consumer is going to end up paying more. And at the end of the day, I think if you are a consumer in a market, and I live in Texas, I was there through the kind of Arctic storm, and in the summer when you use a lot of air conditioning and electricity becomes more expensive, and these response programs are very helpful, you don't really care where it's coming from. You just really see the bill. And so the thing that I think really is going to helps households at the end of the day is just more power supply made available to meet the demands of the market. And if people pay less, that's a good thing.
There are a lot of different avenues. I mean, you could have an entire podcast series on any one of the topics that Matt just talked about. And I think that's why this is so frustrating. I'm going to piggyback on a few things. Number one, it is impossible to to explain to a normie and someone who hates Bitcoin why proof of work is valuable. I mean, that topic alone, trying to explain why proof of work is necessary for managing a decentralized monetary and financial system, is the key to understanding why these massive data centers matter in the first place. And that's just not going to be something that you can relay to the average person because they either don't care or they're just not going to get it. And similarly, when you want to talk about how energy systems work and how all of these energy markets work, that's an impossibly complex topic as well that I don't even fully understand, right? I don't think I fully wrap my mind around how ERCOT's deregulated kind of free market for energy works. And you'll often see, in the same way that people will say, well, Ethereum went proof of stake, so we don't need these computers. You'll see people talking about stranded energy assets like wind, solar, or these methane landfills that produce energy. They'll say, well, we shouldn't use that for Bitcoin mining. We should use it for something more productive. And then you have to launch into a diatribe or a lecture about why Bitcoin mining is uniquely positioned to soak up that load. And that doesn't make sense to most people, because I think most people legitimately believe you put a solar panel in the middle of the Mojave Desert and then you can plug it into the grid. People don't understand how energy is created or transmitted in this country. And Bitcoin miners typically do, because that's what they live. And so there's just this complete information asymmetry that people have a really hard time stomaching, and they're never going to really get it, right? And so I would just say that unfortunately, it's become a linchpin topic in the culture war that gets pulled out every now and then. And it's just so rife with misunderstanding of how any of these things work that I think that ultimately we're kind of doomed to be in this eternal September of people looking at how many megawatts these Bitcoin miners consume and beating their chests and saying that doesn't make any sense. They should stop doing this. This is why we're having electricity shortfalls. When really the story here, honestly, every time you see a curtailment story from a Bitcoin miner or Riot gets paid $36 million to turn off its machines, the real story there is, why is Texas's grid failing to deliver, reliable, sustainable load throughout the year? And this triggers a lot of the people who are going to hate the Bitcoin miners in the first place. I'm sorry, it's because of the renewables. It's because there's way too much wind in West Texas and there's way too much solar that is intermittent. And if we had spent the last 20 or 30 years pouring money into green subsidies, and if we'd spent all of the money and the time in the last 20, 30 years that we've spent pouring into all of these green energy subsidies, putting it into nuclear and baseload nat gas, we wouldn't even be having this discussion, right? So that's kind of
nuclear shill on the pod.
I am unabashedly so pro nuclear it hurts. It is insane to me that a technology that is, 80 years old at this point? We've had this for so long, and it has been it could be and should be the backbone of so many power systems in the US, and it's just not. And I know there are a lot of arguments about costs and all these other things, but really, I can't stomach those when you look at how much money has been spent trying to incentivize things like solar and wind, when the energy density of those systems is so much weaker compared to nuclear. And I feel like a crazy person when I talk about it, but That's it.
That's
No Alex
good.
Jones this week, just Colin. So
Yeah, no, it's good. The one thing I want to go back to the article with is this line, which, they based most of this article around this one calculus, and that is that it's more profitable to mess with the Texas grid or rip off retail buyers' electricity than mine Bitcoin. They say at the end. Doing so, trading electricity on the grid, has become more lucrative than mining itself. In August 2023, Riot collected $32 million from curtailing mining and just $8.6 million from selling Bitcoin. And so I think the one thing that I really got out of this article, which this was at the very bottom, but also in the headline, so funny how the journalist chose to do that, is that there's this very poor understanding of how these electrical contracts work. And the fact that, Riot is acting as an energy reservoir and releasing this energy when the market demands it at a certain price point, and that's beneficial for the grid. And it's just missed by most people. And this was only at a certain point. That was the most credits that Riot got in 2023 for curtailment. Most of the year they're mining Bitcoin, and they make a lot more mining Bitcoin. They do make a lot of money with these energy credits that are, again, credits and not necessarily revenue. There's ways to talk about it.
That's the point. I mean, that's the misunderstanding here that kind of underpins this whole thing is people are thinking that this is liquid cash that ERCOT's giving them, and it's not. It's a credit that they can apply to their energy bills later on. Yeah. This is not unlike if I put solar panels on my roof here in Oregon, I sell that power to Pacific Power in the summer, and I get a credit in the winter for all of the kilowatts that I piped to Pacific Power. And I know a lot of environmentalists and people who are on the other side of this argument are going to scoff at that comparison. And I get it. It's not a perfect analogy, but it's a similar dynamic where you are selling power to the grid and then you are getting a lower power cost later on for those services. Now, why does Riot have to pipe that power back in the first place? That's the question that people should be asking, because these power companies are not going to sell power that they don't have. They broker these contracts because they believe that they can generate that amount of energy. Well, why is that energy not being generated when their models say that it should? It's because the wind's not blowing. It's because the sun ain't shining. It's because everyone's ripping their ACs because Texas is hotter than balls in the summer.
We'll close out there. I think it's a good crowd corner because, I saw this on Twitter making the rounds. It went viral. People, especially environmentalists, complaining about it, but refusing to understand how an energy contract works. So this matters. It's why Riot has been deploying a ton of cash into public policy. They've hired Brian Morgenstern. They've been hitting pavement. Marathon has been making a lot of big moves. I've seen them in DC doing a lot of things. So expect that to continue because there's confusion around it. We will close out. Matt, Colin, anything to leave our listeners with?
Go hug a Bitcoin miner.
Go
hug a nuclear engineer.
Okay, we will see you guys next week. Again, we have that podcast with Brandon Bailey of Second Gate coming out on Tuesday on BitDeer. So if you're interested in the stock, go check that one out. And then we'll have more content with the Court Show as well on Sunday. See you guys later.